This here. Anytime you get a move up or down, you always are going to have people looking for a bottom. Now, doesn't have to be you as a trader, but you should always think, first of all, through the eyes of other people, OPP, other people's positions, and an idea of if there's any anxiety. Be able to say, if you're anxious in a certain situation, then probably a good clue that the market's going to be anxious. If they're short or if they're long, you don't have to be long or short to start tricking your mind and knowing what it feels like to be long or short in certain places. So even if you're short with money on this move down here, you're anxious because why? Well, you don't want to leave money on the table. You got to cover that short position for a profit. And God forbid you don't cover at the exact low. So people are anxious about covering too soon, letting a nice winner turn into a scratch, all that stuff. And it's not just as easy as say, well, I'm going to get short at 95 and cover at 85. Life is good. Never works out that way with respect to changing your target, or people do that because they want to make it easier on themselves. They just want to be like, well, I've got my exits and that's it. I won't touch it. But then you fail to read the real time. If you're short at a good price at 90, 95 and it's trading 86, you took your eye off the enemy. And the enemy is what price might do. You might have more downside if something were to come out or you were to see something with tools that you use if they're decent tools. So 84, 85, the market does get a bounce from that area. What's important is not to expect the bounce or predict the bounce based on feelings, based on what you want to happen or what you would like to happen. All right. If you cover a short down there, then you're going to want it to not go lower because you'd feel bad that you left money on the table. But again, you have to start having some creating some clues of when you're trading what you think instead of what you think. That's the old saying, trade what you see, not what you think. And so you should have alerts when you start allowing feelings to come in what you see, because then the confirmation bias will surface. What can you see down in here? Now, we had some um, puts down in here that created a magnet slash potential support in the ES in this 84, 85 area. So before we even got down there, you could start thinking that or of that objectively being support for, if you just look at right in here, for support and boom, this reaction, this kind of V shaped reaction out of the hole. But what on the side of order flow could help us objectively also predict that indeed 84.85 is going to be at least a temporary low? And also pay attention to how you're talking to yourself. It doesn't have to be the low of the day, low of the week, low of the year. All we're trying to do is temporary stuff. Read the real time. Things change. You not only know they can change, but you should know that they will change. Let the market and ideas come to you instead of thinking you got to keep plowing through and clearing weeds and to dig up an idea. Then it's going to be a shitty idea when you do that in order to find it. So there are a couple things in real time. We start getting a flicker, green to red on the laser. What does that mean? In our OPP, shorts start coming in. They start piling in. What happens, and we've all been there, when you get short in a hole? It means you sell it at 84 and it goes to 90. You know, you finally get on the team on this sell off and it bounces. Well, guess what? People do that on every move. And you want to pay attention to see when that scenario plays itself out on a sell off like this. Where are you going to get the market to start loading up and potentially get short in the hole? Well, we see it on our OPP 2 minute over here, where you see this is just a sample size of longs and shorts over the last 2 minutes in the ES. You see them come in to flip what we call the laser to red. If it's red, that means there are more shorts than longs in the last 2 minutes in the ES with the way we follow it. All right. That's bullish, or certainly ingredients for upside. More shorts, more buyers, more buyers. certainly what's needed for the price of anything to go up. You watch enough of my videos, you're going to hear me repeat that because it's important. Shorts equal future buyers. What do you need for the price of anything to go up? Future buyers, and more future buyers than future sellers. Another thing that we get, you flip the laser from green to red, but you get 1, 2, 3 blue triangles that actually get priced to kind of react to the upside when they come in. Blue triangles mean an area ±3 from where price is of more buyers who want to buy it than sellers who want to sell it. All right. More buyers who want to buy it versus sellers who want to sell it. We are tracking that with real orders, and we got a way to kind of separate bullshit orders from real orders with the fact that when they change, we could kind of create a probability that it's a real order. It's not going to pull when it gets close. So doing all that, doing all those algos and seeing when in fact there's an imbalance, look at it like a teeter totter. When there's an imbalance of more buyers who want to buy it than sellers who want to sell it, to the tune of 250 or more, all right, greater than or equal to 250, 250 more buyers who want to buy it than sellers who want to sell it in that 6-tick area. Boom, we put a blue triangle. And you see 1, 2, 3 come in at the potential low. All right. Don't speak in certainties and be too firm. We're open minded. We're keeping our eye on the enemy, and the enemy is constantly moving and trying to strategize to not get us on the right side. Price, by its very kind of existence, cannot have a lot of people long to go up or short to go down. So by default, it's constantly trying to shake out what would be good trades. All right, so you get more shorts kind of pile in here with our laser going red, and you get 3 blue triangles showing that price might have finally found the imbalance that eventually is necessary for the price to go up in the triangles. Also, we get a line you could draw from this triangle to this triangle across and say, hey, if price breaches that area to the upside, meaning if you breach a pink triangle, which is a sell imbalance, that means price getting above it. If you breach a blue triangle, it's getting below it. What that means is price is snooping around and it doesn't see sellers, or at least an imbalance of sellers like it did the last couple times it was in that area or at that price. Think of price being like a rabbit. Comes out of the hole, looks around, doesn't see any predators, boom, makes a run for it. In this case, maybe a run up. That's what price is doing. Price is looking around. If it sees a lot of sellers, it's going to stay down. It's not going to take off. So if you could use that metaphor, give yourself a better chance to, again, stack probabilities and stay objective. I said this earlier in the room. It's one thing to get objective. It's another thing to stay objective. An objective in this context is staying unemotional. All right? Calm in a storm. I don't give a shit if nothing's going on. If you have a position on, there's going to be potential emotion creeps that's going to creep in. And it doesn't matter if it's going your way or not. There's going to be emotion, and emotion creates what you want and what you have to do instead of what you need to do. Creates the opportunity to be subjective, the opportunity to miss what's in plain sight, because we all want to be right and we all want to avoid being wrong. Two powerful traits as human beings we have. All right. We love being right and we hate being wrong. Confirmation bias. If you're long, you have a confirmation bias. I don't give a shit what you say. You're long. So you're going to tend to look for, some information or data to say you're right, Johnny. Stay in that trade, buddy. Good job. But you should want criticism of your position. And if that critique of that position, and I don't mean by a fellow trader, I mean by the data and the tools you're looking at. And if the critique is, hey, be careful being long XYZ, then you could stay objective. One thing to get objective, it's another thing to stay objective. And that's the point. What tools are you looking at that could eliminate confirmation bias in the data you seek? That's what a tool is, by the way. It's data. How you configure it and mark it on a chart creates the tool that you may or may not use. All right, so you're getting this in real time information that creates a probability that the temporary lows could be in. And we get the breach of the pink. Not only do we get a breach of the pink, let me back it up, of these guys that I drew a line through, but then this one comes in, boom, breaches it pretty quickly. We talked about this in the past where you get a blue triangle. And if, as you get better at reading these tools, what does price do as soon as it recognizes a buy imbalance? As soon as we recognize a buy imbalance, plus or minus 3 ticks from where price is, does price scoot up or does it just stay flat and kind of go down? That's important because if it scoots up right away, it's got a better chance of following through and it's scared of that buy imbalance. If it just hangs there for too long, then it could breach it and give you a clue that it ain't afraid of this buy imbalance. There's some hidden selling maybe that's going to push price lower. And don't ask me, well, how much is too long? And, how many ticks should it go up after you see the blue triangle and how many seconds go by? Those are not the right questions to ask. And I know if there was an answer to those questions, it'd be great. But also, think about our weaknesses as humans. We're looking for anything to make everything easy. We're looking for anything to make everything easy. And that's fine. Everyone's guilty of that at times. Who wouldn't want someone else to click the mouse for them or some tool to say exactly when to get in, exactly how many seconds have to go by for you to start thinking this way or that way? Just don't get caught up in thinking everything has a an answer, a scientific answer, because there's art to this. So you got to be consistent in the tools that you use and make sure the tools are pretty simple. It's like we went through this exercise yesterday. I'm not going to get in it for this highlight. It's already went too long. But if a genie came down and said, I'll give you any data you want, what would you choose? And most people wouldn't know what to wish for. And so if you don't know what to wish for, if you had a chance to see any data, well, then how are you going to, if you don't, therefore you don't know what the advantages are you going to find them? If you don't know what the advantages are in the business you're in, then how are you ever going to find them? There's advantages when you're a football player. They're reading the defense. They know what those advantages are, and they work at trying to expose those advantages. Sometimes it comes right to stealing a sign, for crying out loud, right? And they've done that in the past. So you got to know what the edge is. You got to know what the advantages might be to have any chance at creating tools and using tools with confidence that lead you down the path of answering that question of, is the market too long or too short? The OPP and the laser being red is bullish because, never forget, shorts equal future buyers. And you need future buyers if you're going to predict future price.